In terms of Bank of America, it feels like a very similar story to a JP Morgan, solid across the board any way you measure it.
So far, I mean, we're still going through the numbers, but, trading revenue, we saw very strong equities, a little bit weaker FICC, fees about coming in line for Bank of America. The net interest margin was 1 basis point light. That's a little bit different than we've seen at some of the other banks. But again, we'll want to look at what's happening in their core net interest margin and not necessarily the overall margin, because for these investment banks, their market-making business tends to get hit a little bit faster than the core business from the yield curve.
And it seems like the net interest yield was a little bit light versus estimates. Also, wealth and management total revenue coming in at $4.7 million. So the numbers look really good. But if you dig a little deeper, the individual segments maybe potentially not as strong.
And I think we're going to want to look at also what's happening with credit and also loan growth in terms of where the loan growth is coming in from. Bank of America does have more commercial and industrial lending than other companies. Were they able to benefit from the pickup there? And
net interest income was up about 6% to $11.7 billion. That's going to be a higher rate story. Is that good enough?
Well, again, I think we're going to want to look at in terms of, the reason why I'm talking about loan growth is I think that is really core to net interest income growth going forward. Keep in mind that there are a lot of concerns about the yield curve. If they can get better growth in their loan portfolio and in higher yielding assets, the mix of that can help offset some of the concerns that we see with the flattening yield curve. And again, keep in mind the flattening yield curve, that takes a while to work into banks' overall portfolios. It does impact the trading business sooner, which is what I alluded to earlier. But Bank of America generally more exposed to higher rates, and part of that is the commercial and industrial portfolio because that's more tied to short-term rates. Short-term rates have been rising, and we do continue to expect those increases.